Okay, now let's tackle part 3 of this problem, where we'll prepare the plan assets section of the company's balance sheet. Excuse me. Okay, land, we start off with the beginning. Let me slide up. And then we purchased additional land. That's the $2,130,000 we have there. And then we sold land for $1,500,000. Actually, we sold it for $1,500,000, but the dollar value is actually sitting in that page that we can't see. So let me hit that one there, and I will stretch this so that we can see this. Just give me 1 minute here. Okay, now I've moved it a little bit so you can see that that was $400,000. Okay, let me slide back down. Okay, and actually we only need to go here. So with that formula, we have the beginning plus we purchased less whatever we sold. We have $5,730,000. Okay, next we have buildings, and buildings, the value of the buildings was the $28,500. We didn't have any additions there, so I've added that. Okay, less accumulated depreciation on buildings. And let's show how we get that amount. Okay, so accumulated depreciation buildings must have been what we started with. And what else did we book? We booked another 570, so we'll add that to the 570. If I slide that down, 12,670 is correct. Then we subtract, we take the 28,500 less the 12,670. And we have our building. Okay, next we have equipment. Okay, now I've slid up to the front to show where I'm going to pull the equipment from. Let me just sort of highlight. We have a transaction for equipment there. We also had another transaction where we reduced equipment by $780,000 there. Then we had a purchase of $2 million earlier. And I think we had one other one. Oh yeah, we had an equipment here. Oh, by the way, this is an error. This should not be depreciation expense. This should have been equipment, right? On December 31st, we retired $500,000 of equipment. So I typed in the wrong amount. So I'm glad I caught that. All right, so given that, then what we could do is just reference those cells. So we'll say equal, and then we'll say the 48 million less that credit, which reduces it, plus the 2 million of increase of equipment that we had on July 1st, and then the retirement minus the retirement. Let me make this a minus. And pick that last one. Okay, and then once I do that, I can hit enter. And I'll slide down and I'll show you that we came up with 48,720. So I referenced the cells, and 48,720,000 is the correct amount. Okay, now I stopped this during the recording, and what I did to show which entries impacted the accumulated depreciation equipment is I highlighted them in blue. So now I'll just go point to those. So we'll start from the top, and we'll say we started off with the $5 million accumulated depreciation. Then we had, and remember that's a credit balance, so we will show the increase as our credits there. And then we had a debit, so we need to subtract the 338. The next thing we need to do is add in this 50,000, where we had an entry there, and then back out the 500,000 of the equipment retirement. I think that's all of them. Nope. Then we need to add in the 4772 that also took place that we recorded at the end of the year. And if I've done all of those correctly, we come up with 9010,000, and I believe that's correct. Okay, so then we would just take that less that amount for 39,710, and if if we sum that plus the net buildings plus the net equipment, we come up with $61,270,000. And that's the answer to Part C. Okay, I hope you found this beneficial.